Good morning, traders. It is 8:03 a.m. Chicago time on Wednesday, the 22nd of February, 2023. Thanks for joining me this morning on episode number 2415. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for being here. Quick mic check, please. Let's dig right in here. Let's just dig in with both hands to Convergent Trading's pre-market summary sheet. Key element here is the FOMC minutes today. You're going to want to pay attention to that. That's at 2 o'clock Eastern. 2 o'clock Eastern, and the market's going to be picking that to pieces. The overall stance right now is a mixed market. The ES has popped up a little bit despite the very weak low or very weak close yesterday in what was basically almost a trend down day type, very contested trend down. We'll talk about that in a minute. As far as pre-market earnings, Rio Tinto, Stellantis, Baidu. After the close, we have Nvidia, which is a big player. Key events, key risk events. Again, the FOMC minutes today. Fed's Bullard says that U.S. economy is stronger than we previously thought. So more room for rate increases, maybe. German inflation in line, Italian inflation higher, Bank of Japan emergency bond buying, strong Baidu results, and again, FOMC minutes at 2 p.m. API crude oil, stock change after the close today at 4:30. Recall that API usually comes in on Tuesday afternoon, but because Monday was a holiday, everything shifts up a day. So the EIA crude oil inventories will come out tomorrow. We have Fed's Williams at 6:30 p.m. So that's where we stand. Statistics on the status of the ES, the overall condition of the auction overnight is balanced. If you remember, yesterday was multi-distribution. It was definitely seeking price before we opened. Today it's balanced. 270,000 contracts traded. Pretty solid volume in the overnight session, and then 25 and a quarter points so far, with a high of 20.75, low of 95.50. 95.50, remember, we're looking for 39.90 as the next key level down. Really 39.95 is the MC point of control, and then yesterday we're looking for 4,003 on the way down. The point of control is 4,012, so clear shift here in value. So let's take a peek real quick at yesterday. Yesterday, and if you recall, we talked about it opening. Where are we here? So opening, and we were talking about 40.30 being a key price that we're likely to test, and 4,003 being a key price to gun for. So for today, for yesterday, if you recall, we opened around 40.50, mid-century figure, key area that we were seeking last Friday. Didn't quite get to it. We stopped at 55.75. We opened at 50. So the question yesterday was, do we become responsive and go back into the range, or do we reject that 55, 56 area and then push down, shoot for the 30, look for a liquidity check or liquidity sweep below the 40.30? If the liquidity sweep does not happen, in other words, it doesn't go below the 40.30 and pop right back over 40 and back into the 50 again, if it doesn't do that, then we're looking for 4,003. And if you recall, the 4,003 comes from this little circle that I drew right here. That fills in the weak structure right there. between 4,005 and 4,003, and that would be the key target. And then the extended target would be the 3090 area. It's really 3090.95. Please remember, I got a message yesterday that said something like, you were talking about 4,003 and it went to 4,002. What do you do about that? What do you do then? And just a quick reminder for anybody that's new to trading in general is trading occurs in zones. It really is. There's no precision in trading. So if you're someone who is a developer or an engineer, mathematician, that sort of thing, you're going to have a hard time if you don't accept the fact that these are all guesses. These are all guesses, right? So we're looking at areas the market is likely to respond in, and they can't be precise numbers. They have to be zones because we have no idea. Nobody does. Nobody has the secret algo code, back room, super secret sauce, whatever. Not even Citadel. All Citadel's doing, which made a crap ton of money last year, all they're doing is playing the statistics. So you have to be more of a statistician than a mathematician, a pure mathematician or physicist when it comes to trading. So if we don't hold the 4,003, then 39.95, 39.90 becomes next. So that was yesterday's plan. Here's what actually happened. So again, a reminder that the blue profile is RTH. Okay, this is RTH. The orange profile is ETH, is extended trading hours, which means outside of the stock market being open. Okay, so ETH starts at 6 p.m. Eastern and stops at 9:30 a.m. Eastern. The next day, RTH starts at 9:30 a.m. Eastern and stops at 4 p.m. on the dot, p.m. Eastern. So with that being said, here's the open, 45. We dropped a little bit. We're at about 50 during the trader bite, and then that's the response I was looking for. Look at that. Look at this. Pushes up. Now, listen, I'm not telling you this is easy to trade. I'm not saying that I traded it. Okay, just because the lines hold, and they did pretty well yesterday, doesn't mean that, you know, it's a textbook trade, should have killed it, blah, blah, blah. It's not how it works in real life. But we had beautiful tests. We had a responsive test up to the prior day's low. The prior day's low was at 55.75, I believe, 55.75, and we pushed yesterday. We pushed a 56.25 by 2 ticks. We tested the prior range by 2 ticks. That's responsive. We closed the gap. Full session VWAP happens to be there. That's the dashed cyan line, and it drops. Nothing for me to do here. It drops. This is where it becomes key right here. See that? Boom, 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 boom. You have excellent confluence there. And risk is right there, that the zipper high. So what you have is a return to multiple lows here at 48, and then you have confluence with RTH VWAP and RTH mid for a short, and the short, of course, will target 40.30. Okay, and what does it do? It goes to 40.35 and pops higher. We start to see rotations kind of increase there. I found that this was tough to hold. Those of you who were in yesterday's trade talk with Convergent Trading, we really talked about this at length. The price action and the order flow yesterday really indicated pretty loudly, in my opinion, that the lows were being supported. that the lows were being supported. So the concern about being short and holding the short setup here is a short squeeze that would push right above our entry in that 45, 46 zone. And so it was a tough hold. It was a tough hold. If you're someone who reads auction market structure, you would have been short all day. It opened below range, of course, below value, below the prior range, below value. It held the prior range low. It remained below full session mid, full session VWAP, and then later below RTH mid, RTH VWAP. It kept putting in weak lows persistently. So auction structure says that these are likely to continue to be taken out. And there was no real, there were some positive rotations yesterday, but no real threat, really. We didn't have like a 15-point positive rotation. So this was a day to kind of sell and hold and trail. But if you're an order flow trader, it was really a tough hold, right? So let's take a look at that here a second. Let's close the DOM and go back. So those of you who are convergent, we beat the heck out of this in a discussion yesterday. But if we go back to this 35, of course, I lost the MBO data here. So it doesn't really show the dots, but what you will see is a lot of big dots with every low. You would have seen heavy dots, selling dots with the lows, and those selling dots had to have been absorbed by buyers, by bids, and we kept seeing that throughout the session. Again, that data is gone because it's MBO data, which is not stored. Tick data is stored, and it doesn't quite give us the same detail, unfortunately. But you could see this, in today's run up, for example, this run up here, order flow wise, who was selling to these lifts? Somebody was lifting 50 lots plus all the way up here. Who was selling to that? This could mean an exhaustion top and a down rotation, right? When you have so much activity like this, we had kind of the inverse of that yesterday. So very interesting indeed. But let's look at what we've accomplished yesterday. So there it is. Test of the prior range was completely rejected. Remember, we still have a double TPO high here from Friday. Got to keep that in mind. And we ran and closed the weak structure right there. So we just went right into it, right into the 4003, hit that mark, and then bounced back up to 4016 or so on the close, and we ended up settling at 4005. The additional thing you should note about yesterday is that we closed below 2 Vola Sigma down. So close to close volatility sigma. The first sigma describes the historical probability that the market will close between certain bands, and I'll tell you what those bands are for today, just for, unfortunately, these colors don't sync with mine. So this is the 1 Vola Sigma up right here, marked right there. And then the 1 Vol Sigma down is going to be somewhere, let me see where it is. The 1 Vol Sigma down is about 38.75. 38.75, way down here, 38.75. So historically speaking, statistically speaking, so the 1 Sigma up is 58, 39. 958. Weird way to write a number in pieces like that. And then the 1 Vola Sigma down is 38.75. Statistically speaking, historically speaking, we expect the market to close somewhere within this band. Yesterday ended up, is it 65? Okay. That's odd, John, because my master level shows 75. I got to check that. Okay. So, historically speaking, it should be 65 given the given the okay, so 65. John in the chat is the dude who does these levels for Convergent, the master of the ES. So yeah, I'm talking about today. So what this means is that we expect about a 70% probability, historical probability. We have a historical probability, not expect. We have a historical probability of the market closing in here. Okay. For yesterday, the second Vol Sigma was at 4,008, and the market closed at 4,005. The historical probability, the statistical probability that would happen is somewhere around 2.4% or 2.5%, something like that. 2.5%, and it accomplished that. What this means, okay, what does all that mean, the statistics stuff? What that means is, given that we gapped down and we continued down and we pushed through one Vol Sigma down for the close, two Vol Sigma down for the close, and we finished below two Vol Sigma down, this was very clearly an impulse down day. This is an unusual day, close to close. Close to close. It's an unusual day, and this means that statistically speaking, the flow is very likely to be downwards. This 4,000 is likely to go, and we're likely to continue lower. It is extremely rare that the Vol Sigma, the second Vol Sigma, gets broken to the downside, and we end up pushing strong in the other direction. We may become balanced and just go sideways like this today, but the probability, the flow was to the short side. This, however, does not explain the fact that yesterday, despite all that jazz, all that stuff, look at the delta. This thing fell from 56 and a quarter. This line here represents the market open. From 56 and a quarter all the way down to 4,002, and the delta finished positive on the day. So there's just a really big delta divergence there. The market closing below two Vol Sigma band, the two volatility sigma, historical volatility sigma band for the close, but the delta was positive. I've never seen that before. Very, very rare. So in general, when we do have Vol Sigma down closing that week, we have follow through. We're very likely to continue lower, which we did in the overnight session. We pushed to 95, and now the market's holding steady above the close. We're likely to balance today. So I'm looking for a balancing day, and if we look at the delta, the details using MBO data, looking at the details for the delta, large lots are buyers, very large lots are sleeping, small lots are sellers. We have a divergence there in these groups, very choppy open most likely, on top of the fact that we have the market sitting right on top of overnight point of control with some support from the full session VWAP and the full session mid below, which is a 4,008, the VWAP at 975. This is very, very likely to be choppy, but the big picture, expect this being a large impulse day down. Big picture, I'm expecting this to chop around, and I'm expecting it to continue over the next few days, or the FOMC gets this thing rocking to the downside. Okay, so the bulls have dropped the ball. They fumbled the ball. The ball's bouncing down the field, and now we want to see if the sellers pick it up and keep running, or if the bulls recover it today on the FOMC and bring it right back. If they bring it right back, remember the zones from this video yesterday. Remember these zones. 40-30 becomes important. Above there, 66. Above there, 4,100. These are the levels that you need to be aware of. That's all I have for you for today. The NASDAQ looks basically the same. The NASDAQ's trading the same levels, 12,500, 12,000, and so on and so forth. I don't have time to cover anything more than this, but I also wanted to make sure you knew about today's show at 12 p.m. with Futures Radio Show's Anthony Crudelli and Andrew from Traders Community. We'll be talking about crude oil. What do you need to know about crude oil to make money in it? Make sure you register for the giveaway. The giveaway is 4 $250 gas cards. You can get all that at edgeclear.com/deli, edgeclear.com/deli. Go sign up, and I'll catch you all at 12 p.m. Eastern. We'll be live. Take care.